Hello, welcome. If you're just joining the live trade room and you're wondering how to best use the Algo room, normally the moderator, myself, is not in the room 24 hours a day. We do a pre-market morning briefing, and then throughout the morning session between 9 and 12, we give out swing trade, update, newsletter performance, strategies that we've been talking about for options and equities. And then the Algo room, everyone has access to the Algo room. So there's two trading rooms that everyone has access to. The main question in the Algo room is how to best use it, and that's what we're here to answer for you. First and foremost, if you look at the strategy you're looking at, this is the first thing you would look at is the upper left corner. It says it's the SPY, so you know that's an equity position ETF, not futures. Next, you would look at the time frame. This says 60 minutes, so you know that you're trading a 60-minute chart on an ETF of the SPY. Next thing, signals. What do they mean? A sell signal. We have this set at a constant set amount of equity. It traded, in this case, negative 244, shows that it's short 244 contracts. The purple arrow with the circle says it got in at that bar. The triangle shows you at the exact entry price. The red bar is the initial stop that was placed based on that strategy. The blue line is your initial profit target or calculated profit. You can't calculate a stop unless you have a profit target. So first and foremost, the entry and the stop is calculated on a profit target. Is the profit target used? Generally, no. Why? We have 3 different stop methodologies incorporated. When price number 1 gets near that profit target, an emergency stop, which is orange, kicks in. So that's the first thing that would happen as the market gets near a profit target. It puts in an emergency profit stop. Next, we have a contingency, what we call a dynamic stop, which is a part of my methodology of using a last conditional change, which you can find what that last conditional change means by simply buying a book on Amazon entitled Candlestick and Pivot Point Trading Triggers. I do recommend you buy the second edition that came out, more modern and updated with recent examples before the pandemic, or as the pandemic came out is when that was published. Next, if you notice there are these gray lines, those are actually the emergency stop as indicated with a dynamic, the second stop function, which takes the averages of the last conditional changes. As you can see, this got stopped out, not by the orange line, but by a dynamic stop. So one will override the other and give you the best performance of profit. Next, a new trade enters into the trade, and same setup. It's short, tells you where it's short. It shows you exactly where your emergency stop is. But this time something happened. You'll see the orange kicked out. That was because it came close to the profit target and an emergency stop kicked in. Otherwise, your trailing stop of the dynamic was way up there, and that would have turned into, well, you would have held it and turned it into a loser over here. So this trade is flat. Next thing that happens, it gets long a position. So you're long the market, your stop is down here, the market hasn't moved enough to get a trailing stop, but if you'll notice, the initial stop loss is red. Now it's kicking in some dynamic stops because nothing condition has changed, but it has new conditional change stops. If the market moves up, a stop will be recalibrated. This position just can always be reviewed in the strategy tab right here. SPY shows what your strategy is. It's the 60-minute short. Tells you, or excuse me, in this case, the new position is now long. It shows you how many it is long, 254. That matches the size. It also shows you what time it was entered, the strategy price that was entered in, the current price, and the net gain or loss. Always shown up on your strategy profit and loss manager tab right up here. This is always displayed. The next market that we have is the E-mini S&Ps. Same indications mean the same thing. The red is your initial stop. There's 2 things though that are different. The blue line on the E-mini S&P is not to be confused with a profit target line. This is the daily pivot point, and the only market that we actually overlay the pivot points is on the E-mini S&P 5-minute model. This is ES 5-minute model. And this will kick out day trades, and it has the same function. It trails stops, and in this case, you can see that we went long, the strategy went long. There's your emergency stop. It hasn't been in enough time to change that stop, and as it is right now, this particular trade is only up $125 in this case. The next thing is we have an SQQQ model. We have Bitcoin futures. We have the GBTC, which is an ETF, an exchange-traded fund on Bitcoin. So the GBTC model is the 60-minute model, and the futures for day traders on Bitcoin is a 15-minute futures model. Same color coordination. If it goes short, it shows you there's your initial stop loss and there's the intended profit. Otherwise, it trails the stop and will get you out. Performance, we covered the performance usually on a weekly basis. The performance summary over the last 2 years, it just made a new equity high, and over that last trade there had a little minor drawdown off peak equity high that was just achieved. That is the Bitcoin futures model, which has had a stellar return. Right now, it too, because, well, I guess it's on a comeback trail. This model trades 24 hours a day. We keep that live in the room Monday through Friday. Next, we have the SPY model, which the ETF, it too was just in a new equity high, had a recovery off of a drawdown, and now we're right back up on the swing of things. But from left to right, you can clearly see we have a good, solid history of that trading model for our clientele. Down below, this is the SPY. It's just an indicator window. It shows what the daily chart's doing, what the daily signals are with PPS. It also has the monthly pivot support, person's pivots on it. Advanced decline, it shows everyone, like on this particular day, we have 192 advancers versus 303 decliners. So that means more stocks are down than up. This has the on-balance volume. It has the advanced decline cumulative ratio line, my proprietary person volume indicator. It is hard to see, I understand, but what we do at the beginning of every day, we go through the data. It's easy to expand the chart, and we take a look at what the advanced decline comp or comparative ratio line is looking like, what the volume trend is looking like, stochastics, a McClellan oscillator that's modified for the S&P 500, which is why we call it the JP Mc oscillator. I took Sherman McClellan's work, I modified it, and I applied the data rather than the New York Stock Exchange or the tick, as a lot of people like to use. I am trading S&Ps, not the NYSE, so therefore I like to look at the component strength or weakness of the index, and that's what that indicator reveals, the overall breadth trend of the market using McClellan oscillator's idea, but it is taking and extracting the data using it from the S&P 500. This is last but not least the ATR, average true range, and this is based off the 10-day period, not Wells Wilder's 14. So pretty much when you come into the algo room, this should be the normal format that you see. Everything is transparent. It's posted. It's done live in front of everybody. As you can see, the S&Ps are upticking right now from that long position, and you can see the ES is adjusting the profit live in front of people. That's how to use the room in a more efficient manner. Thank you for watching. I hope this sincerely helped you get a better idea of how the room works, what the signals are, and what the lines represent.